Hey Scott, nothing much. How you doing, buddy?
Good.
Hey Jamie, how you doing over there, sidekick?
Andy, my man, how's it going?
All right, all right, doing good. Uh, Thanks everybody for taking time out of your day. I always like to say that because you could do something else after the market closes, but yet you guys are want to come in here and further your education on our software and on trading. So kudos to you, and hopefully we can give you a nice little presentation today to help you do just that. So, before we get started, we always have to go over the legal issues, not issues, but our disclaimer here. Once again, folks, I know you've heard this over and over, but we have to do this. This content everything you hear and see today is for educational purposes only. We're going to be talking about some nice looking setups, some incredible moves today in some stocks, but nothing that you hear or that you see should be construed as investment advice. Okay, why don't you go see a broker, registered advisor if you are seeking that type of advice. But we are going to have some fun. Guys, before we move on, bear with us, the people that have been in this room that's been a long time customers and have to hear this every week, but you guys know as well as I do about our five-star support, education, and training. But this is for those who are kicking the tire and are, thinking about getting this very powerful software that is intuitive, but at the same time, there's a lot to learn, and we help you with that. We have a trading room, a live trading room that is open, every day. The market is open. Pretty much 7 hours a day, starts 30 minutes before the market opens. That's moderated by Barry, professional trader who trades and calls out his trades and uses our software to find these trades. So great place, guys. If you're not in there, get in that live trading room. We also have a number of webinars throughout the week, all in the same time slot, the same as this one, 5 Eastern time. On Monday, you get Jamie and Steve. Wednesday, we throw Dan and Brad at you. Dan is our CEO, Brad's our CTO. It's a great place to look at new features that are coming down the pike, and also, great Q&A place. And of course, the trading studio, which is myself, Andy, and Jamie. And then the Friday support session, guys, tomorrow. Please get in there. It's from 11 to 2 Eastern time. Myself, Jamie, Steve, Sean spend some time in there. Great place for you to come to get obtain more knowledge about our software, and it's the same format as this. You guys can ask questions, and we can. But this is just geared for Q&As, whereas this is more of a presentation we have for you today. But we do take questions. So moving on, one last thing about our incredible support here is when you sign up for Trade Ideas, whether you sign up on standard or the premium, you get a free one-on-one training. This is 1 hour spent with myself, Jamie, Steve, or Sean. We will take you through the product. Sometimes we have people that need help from the very beginning, setting it up. It's just, I spend so much time with people, showing them. We share with you all of our favorite alerts, and then I help you build a custom layout. We all do this for you. With fresh new alerts, and then obviously you can build your own alerts. We teach you how to do that, but it's just it's invaluable. All right, and it's free once you sign up for Trade Ideas, so please remember to do that. All right, and one last thing before we move on to our agenda. Okay, we do have a Brokerage Plus product with Interactive Brokers. Okay, what this allows you to do, guys, we have a module. You have to be on premium, but if you have premium, you can get our Brokerage Plus module, okay, that allows you to tie in your strategy so you can automate them with IB. Okay, this is for the more advanced traders. If you want more information of that, about that, go to trade-ideas.com/beta, and it will be provided to you. All right, let's take a look at the agenda today. We have, as always, the market recap. We'll go over that briefly. Holly recap, kind of a strange day. She got off to a great start, but boy, the afternoon trades kind of set her back. So we'll talk about that and show you the pockets of opportunity that we saw in Holly today. I know I've been pounding the table on this extreme volume high-low, but once again, under the same theme as patience grasshopper, I'm going to show you 5 more examples today that you could have just patiently watched the market for the first 30 minutes and found some incredible opportunity off that alert. And for those of you who are new and may not have our handout, yes, I will share that with you. So looking forward to that segment. Of course, Jamie is going to show you some cool stuff that he has off his Turbo family. He caught some great trades on that as well. So plenty to be had today in the market. I think we all know that with the gap up. SMA tracker. This is a new top list. So hang around, guys, until the end of the day today. Because it's not nothing earth-shattering, but it's a way for you to scan and take a look at any top lists that you symbol lists that you might have created, or just the market in general, and how to easily find stocks and when they're close to their main moving averages. So I'll go over that, and of course I'll share that with you as well. But let me back out of this and we will dive into the market recap. Let me pull this out a little bit and put up the one that we always go to, which is the S&P 500. We call it the SPYs a lot of time in here. And it was interesting. I mentioned to Steve yesterday. I don't know, going into today's action, we had a market that had been putting in a series of hammers. In other words, it tried to sell off and kept bouncing back, showing strength. Here's another one, tried to sell off. And then yesterday we had a pretty big gap down. Now this was just based on world markets. The Nikkei was getting hit pretty good for the last couple of days. Europe, some of those stock markets were selling off. So the markets overseas didn't look anything like this did over the last few days. But I noticed our market held up, tried to sell off once again, and pretty much finished in a nice little tight spinning top. And I mentioned to Steve after the market closed, I said, you know what, this is setting up, the world markets will bounce overnight based on our market's stability and the strength and its vigor to not sell off like the other markets done. In other words, it was kind of holding up the other markets, and sure enough, world markets had a nice rebound overnight, and of course we had a gap up this morning, so we could. So here we are again, the bears once again, looking at this price action, hitting a 3-week low pretty much in the diamonds and the spiders, and you thought maybe, oh boy, here we go, but no, same thing. We cannot get that pullback, and it's been a long time since we had a 3% pullback, and now we have a gap up going into the weekend, and not far from all-time highs in the spiders. The Qs actually tickled it today, did not close, but once again, here we are. And guys, it's just, incredible strength. Justified or not, that is the price action we have, and you have to adhere to it, or, at least respect it. And I think did I pull up the diamonds yet? I don't think I have. Diamonds, not quite close, and, a couple of the stocks I think have been pulling that down, but still kind of more in the range, nothing like the Qs. Look, let's take a look at IWM. That has been the weakest sector lately. Nice rebound today, but nowhere near its highs going back a month ago. So there we have it, guys. Jamie, is there anything you want to add to this resilient market recap?
Well, looking at that SPY chart, of course, Andy, we never like to predict, but man, we've seen this movie so many times before, it seems. Mm-hmm. And I wouldn't be surprised to see not a trading up to all-time highs. That would be too good. But, if we did see a gap to all-time highs tomorrow, and then, hey, it just so happens to be Friday, right? Mm-hmm. So, I could just envision Wall Street going, oh yeah, gap to all-time highs, kind of flatten out, and then off to the Hamptons. Of course, yep. I could be wrong, but I guess we'll find out.
Well, I will say this, historically, the market, you don't see too many violent down moves during this time of year. Okay, you usually have the holidays coming up around the corner. You have a light trading and just kind of a continued melt up. A lot could be said around the Christmas rally and things like that year end. So
Right.
it's just to me it's just setting up for maybe a lackluster melt higher, just like we've been doing.
And of course, October is like hurricane season for the market, and we got through that unscathed. Much when there was all the hullabaloo about October '87, blah blah blah. But once again, resilient is the term of the market right now. The best way to
Yep.
describe the market, so to speak.
Yep. Very is definitely resilient. So, the trees were being shook just a little bit over the last couple of days, but gosh, right back, just all it takes is one day gap up and move higher. And speaking of the gap up, as we venture kind of into Holly, this is one thing, guys, we've noticed, on the, I shouldn't say significant gap, but that wasn't a bad gap when you look there. Holly's had a little bit tougher time. Today, you can see risk on. She was up, over to, gosh, close to $3 on risk on, but it just kind of bled off, and I think it had a lot to do with, her late entries. If I sort by time here, you guys can see what I'm talking about. After the 11:30 Central Time, of course, this would be 12:30 Eastern Time. The trades they just weren't working, and they weren't working from the get-go, so the market had kind of done its thing, and kind of late in the day it just wasn't any more follow through, and we'll talk about that. There was still some incredible entries. We always talk about the entry being the most important part. Well, maybe I don't, but I'm telling you now, the entry is by far the most important part of a trade. And Jamie always points out, that Holly is real good with her entries, but she's not the best with her exits, because, after she exits, there's so many different variables that, that factor in on the holding time and things like that. But, and we're going to give example here, a couple right here where she got out for basically a flat. And as a trader, you would have no reason looking at these charts. I'm just going to save Jamie a little time here, and I'm going to pull up B-Sign, which is, just a beautiful entry right there. And, she got out pretty much for a flat, and there was really no pain at all here, and it just kept, moving higher. I think it was up over $1 at one time on risk on. So when you see that kind of, action, and you see Holly getting out for a flat, you ask, why did Holly get out for a flat? Well, she's designed, with some risk parameters, and one of the risk parameters, and one of them is called profit save. And when she had a profit, which she did, she got a quick move up. That quick move up actually probably hurt her, because she got out for profit save, not letting a positive trade turn negative. So that being said, ECL, the same thing there. I mean, look at this. You had the entry right here, and she had a pop right there, so she had some nice profits, and then she came back and she got out for a flat. Whereas you as a trader would be able to manage this better, maybe you would give yourself 10 cents, to the downside, and you could have been able to ride that trade a lot longer. So
yeah, or just stick to the hard stop on that one,
Yeah, absolutely. And I know, myself as a trader, I am not going to get out for a flat just to get out for a flat, but it's okay. I mean, for right now, I mean, we are constantly working on her risk parameters. So trust me, me and Jamie see this, and we relay stuff like this to Brad and the other guys, and they understand. So we will tweak it, and in the future, maybe we'll be a little more lenient on the stops on some of these strategies. But nonetheless, let's, looking at the profit, overall as the market closed, it was a kind of a lackluster day, and thus, I'm sticking with my theses, on the gaps, Holly, it's not her best performing days, I should say that. Would you agree, Jamie, there?
100%, 100%.
Okay.
Which, folding the gaps in, and we talk about this frequently, about setting our expectations for the day, right? And that's part of the routine. Hey, What's the gap? Which direction? How big is it? Right? And it just seems like clockwork. The bigger the gap, the more it throws the model off. It throws a level of complexity into just about every type of trading. I'm sure some people are real happy because they're big gap players, but the way it manifests itself in the statistical model is a little bit more uncertainty.
Mm-hmm. Absolutely. And to answer your question, Alan, no, we're not. I'm not saying we are changing the parameters, but I am saying this. Okay. Anytime we publicize our results, okay, they are based on risk off. Okay. So trust me, when we see this, we don't like seeing this. We want to better these numbers. Okay. And when we see Holly getting out for flat, uh, and trust me, Brad sees and Dan sees and me and Jamie see, and we talk about it. And yes, they will take a look at this and see. And plus, we have somebody now doing a vast calculation of all of Holly's results over the last 2 years. So yeah, quite possibly there could be some changes in the profit save and risk reduce risk, and we will be sure to bring it to your attention if that is the case. Uh, but that's about all I have. If you want to go over a few more other things on Holly, or I know you have some other some great alerts to show us on your Turbo family today as well, Jamie. So
yeah, well, I mean, we could continue to look at Holly, but I think
okay.
it is pretty much what it is today. And she started off not too bad in the first 3 or 4 trades and got up a little over a point or two.
Mm-hmm.
Due to the nature of the market, and the SPY took off and kind of flattened out. It is what it is.
Yeah.
Just one day in the cycle since the beginning of 2016. Every strategy is going to have its little iffy days, but hey, the past 10 trading days have been phenomenal for Holly. She continues to widen the gap between the SPY, and yeah, she's not so good on exits, but we all know that. So we're going to work on improving that, but there was still some very nice opportunity put in front of everybody today. Okay.
Mm-hmm.
And then, once you're in that position, then we kick into second gear, which is risk management, protecting your profit. So, even though Holly's showing kind of some lesser results than we'd like on risk off because of her poor exiting capabilities, there's a lot that you can read between the lines there. And hopefully, since we talk about this all the time, collecting a little bit of that spread between risk off and risk on, those are the things that you can't necessarily see in a nice little column here.
Right.
Everybody's going to be a little bit different.
Yep. Yeah, but getting back to what I was saying earlier too, it's like, you as a trader, if Holly's, had a really good morning and maybe you participated and you see it's getting late in the day, I know when I was trading, my most profitable time would have been, the first 3 hours of the day. Well, maybe apply some of your rules and, as well to Holly. As a matter of fact, I'm sure the guy who's crunching these numbers, he's going to come back with some stats on, the timed the entry times and which ones were profitable, and that's going to be great data for us, and we'll learn from that. And but anyway, man with machine. Okay, machines giving you ideas, you have to decide where to take them. And if you see the market kind of petering out at the top, and maybe just be a little more careful on the late entries in Holly, but I'm not going to say don't pay any attention to them because there could be some good ones in there as well. So I'm not going to argue with Holly too much because she does have some incredible results, going on almost 2 years now. So all right, Jamie, if you want to take I think it's probably good for Holly. If you want to touch on anything else, just take the screen and do so, or if you just want to.
I'll go ahead and grab it here, and let me get my system back up here, and we'll just do one more little perusing here before we move on to some of the other stuff here. Okay. So the ECL, we already covered that one. We were talking about this one earlier, the JD, and this was kind of a shame here because we're looking at 15-minute candles. Well, look at this opening 15-minute candle. Big wick on the upside, big wick on the downside. She went in 5 minutes, 5 minutes after the open. Sometimes this is the peril, actually 7 minutes into the open. So this is the peril that sometimes exists in that opening range. And of course, they shook the tree and then boom, straight up to the upside. Now, would you have been interested in trading this? Maybe, I don't know. What did it look like on a smaller, if we're using 5-minute candles here? Well, still treacherous in that level right there. A little consolidation and a pop to the top. And then, of course, if we're looking at the daily, there might have been a little bit more room in there, but no use crying over spilt milk. I'm just trying to scout out if there were any additional trade arounds, which I didn't see a whole lot of today, which is when we see the red and then later on the green, then there typically is an opportunity to get back in there on the second occurrence. But you can see once it got above that price line, it never came back down again. So, it's interesting observation, Andy, today, because man, it was just buy right on the open. Huge metrics to the upside. Of course, at the same time, we're thinking to ourselves, well, is today the day? Or are we just going to go ahead and pop on up there and hit ATH, which is all-time high? But it wasn't in the cards today. But the point I'd like to make here is that, once again, even though Holly is a very advanced window, still really that's all she is. It's a high-quality window. Of course, it's looking at statistics versus we, as traders, using our favorite windows to look at charts, right? But man, Andy, my high volume tickers today, and yours as well, we're kind of on fire today. So I'm going to pull this guy over, and this is pretty much it today. There were so many good setups that came through the Turbo family up no resistance today. I was really shocked and amazed to see Walmart is leading the market higher today. Boy, some would argue, and we got to be getting close to a top if Walmart is leading the charge. What about all the tech? What about all the stuff like Amazon? Remember not too long ago, Walmart's having to jockey around and try to compete with Amazon, and now I guess they did something right because Walmart just blasted off into all-time high territory here. But not huge opportunity after this range break here, because a lot of stocks did this today. It was just the constant escalator up. But then several of them, they can't just buy, even in a mega cap like Walmart, because they don't want to have too much market impact. So real beautiful little chart up here, looking at 5-minute candles, how it just kind of based around out up here. Went range bound right here, and then as it started pecking again with high volume, it was all over this ticker here. So you had a really sweet opportunity, almost let's see here, 9:10 all the way to, you had almost an hour to get into this trade today, and you knew the volume was massive, and you knew the volume was pumping. Andy, we saw this not too long ago in IBM. Remember when you see that mega cap stock finishing the day trading 5.58 on relative volume, something's up. So literally, the risk is so small here. If we took that trade, on a range break here, we look back 15 minutes. That's some tight risk, and the reward area was up here, and that was in Walmart, of all things.
I know.
So very nice risk to return ratio there. And I'm just going to scroll through. Let's see here. 1, 2, 3, 4, 5. I've got 5 more that, once they were brought to your attention, just the risk and the way that these things moved up today was phenomenal. And not only that, but when you are able to identify these patterns early on, you get opportunities for second and sometimes even third opportunities as the range just slowly keeps getting taken up in this stair-step fashion. All right. So PYPL, a little bit tricky here. It kind of depends on what kind of trader you are. A lot of people eliminate these opening wicks, which makes the first range break right down in here. If you're a stickler for the rules, then it wasn't until about right here, if I pulled that line down to that wick right there. But in any case, whether you're eliminating the wicks or playing the candle bodies, same song and dance. Very low risk entry, very high volume. PYPL still finished today trading 12 million shares, and volume on all the smaller time frames was above normal most of the day. So PayPal, Walmart, then we got some of the less widely known names. Once again, here's the escalator up, which a lot of stocks did, and then you'll get the little consolidations, and then it pops to higher highs. Not nearly as pretty as Walmart and PYPL, but the point here is that these little guys were all over the place. Once again, some nice hairy wicks to the upside in the first 15 minutes. You play strictly by the rules. You got to use that level, which still isn't bad. Or if you're a wick eliminator, you like to give everything haircuts and play the bodies, you would have, you would have been in it a little earlier, but with some very clearly defined risks and some very nice follow through. Once again, on Autodesk, volume wasn't just insanely crazy, but when you go back and look at these breaks right here, if the volume was high on those lower and smaller time frames, and it usually at this point in the day, if it's already at a 1.3, that's always a good sign. Now, Autodesk finished at 1.49, which isn't too shabby, but when we're looking at patterns like this, the higher the better typically. All right, so we got Noah and a couple more here. Once again, all of these stocks came through the turbo up family no resistance, and I'm almost forgetting to point out this second part of the equation. So hey, here we have it again. Range bound stock, pops with volume, even consolidates a little bit longer. Another great entry point right here, potentially, with volume and low, extremely low risk. Then we're in the money. Hey, everybody's happy. But what are the expectations? And of course, the beautiful thing about when you find a nice tight intraday setup that makes us all nice and cozy with low risk, that's the first part. We get the move, we're in the money. Now what? Well, we have to decide. Okay, well, we usually look to the left, or we always look to the left to try to identify what that resistance may be. Well, of course, using the nice cozy intraday range break to get long here, and golly gee, what do you have happening right here? You get the same type of pattern occurring, but on the daily. So now that's an added benefit. We're looking to the left, no apparent resistance. It's into blue sky territory. That's a really good characteristic to have on your side when you're long and you've got a lot of confidence at that point to go, you know what? I'm going to try to stay in this as long as I can. Maybe you got out up here, here, or anywhere up in here, but look at the risk and look at the profit area. That's what you want. Big profit potential, very, as tight of a risk as we can get. And so these guys were just all over the place. I'll round it out with this little guy right here. Once again, it was like the algos, I don't know if this is algorithmic or is this the slicing and dicing thing that all the institutions were using today. Doesn't really matter, I guess, in the end. But no interest as this thing is, cascading upwards here. That's not a flat line. That's sideways. But look what happens here. They can't just keep buying and buying. They have to take a break. Buyers and sellers become equal here, forming this nice little risk area right here. All right. So when we get the penetration here, we're doing that simple 15-minute look back. There you have it. There's your risk. Rewards up here. So you see the market.
What an incredible slope that is.
And that's just a good thing to point out is, yes, today there was a buying frenzy, but from a statistical standpoint, things didn't make a lot of sense. But when we're looking at these patterns and being able to pick things out here, sometimes you're going to have this type of trading coinciding with the statistical model doing well. Sometimes it's going to be opposite. You just never can tell. It's all about observing in the moment and going, okay, if this guy's having trouble or we're having these severe pullbacks, right? Look very similar to this the other day, except we'd actually dipped down into the red. But once you see this one, whoosh, Holly's almost up $2, whoosh, all the way back down to 50 cents, then all the way back up to 231, and gives it all the way back. So when you see the AI having these fluxes, that's kind of like a little bird going, hey, don't get too greedy today. Use good risk management. And if you do use good risk management, well, this is going to happen. Let's say you get in here, 200 shares up here. You're like, I know it looks good over here, but I've had a couple other ones that roll back over. So you can't ever go wrong by peeling out a half after a move. And then you set your stop loss for the second one at break even, which would have been down here. And then you got the one that continued. Worst case scenario, you get in the money 40 cents on one of these guys. You book your 40 cents. You lock in the stop loss for break even. You end up losing a few pennies, maybe a nickel on the last one after you send a market to get out. You're still up 35 cents on the trade. You know, you didn't knock it out of the park, but you hit a single and you hit a double. And that's really what this game is all about. You want to hit singles, you want to hit doubles. Every once in a while, you're going to get that triple. And then every once in a while, you're going to knock it out of the park. But those are the exceptions and not the norm. So on a day like today or any other day, these little guys are always there, but we have to really focus on the risk and what the volume levels are when these patterns are being presented. You know, it's like the gas in the tank. If you don't look to see if there's gas in the tank and you slam on the gas, you'll go for a little bit, but eventually you'll come back or you'll run, you know, your vehicle will stop. So just think about it from that perspective. When you're playing a pattern continuation, the more gas that's in the tank, the better your odds are. And that's why Andy and I really like these high volume windows, because as I say in some of the training sessions that I do, a lot of them actually, I think a lot of people are going about the process backwards. In other words, they look and look and look for their pattern continuation, whether it's one like this or one a little bit more complex. They get so excited when they find their pattern, they just put the trade on. They don't pay attention. They don't see that the stock is just doing normal volume or slightly below or slightly above. When you're doing that, when you're playing that game with those stocks, you're back to the 49% 50-50 chance. If you just make sure that the volume is there, boom, you're way above 50%. Because you're using your chart reading skills and you're looking at these metrics that come through. Obviously, if the volume's not there, you don't have to worry about coming through here. So it makes our lives easier. I know the volume's there. I can quickly confirm here. Then all I have to do is go, is this the right shape peg for this hole? Yes. Okay, put it in. Easy as that. Simple as that, I should say. Andy?
Very good, Jamie. Good stuff. There is, Kevin was asking what scanner this is, so maybe you might just want to drop it in the chat for him.
Yeah, I'll drop it in. And once again, this is looking at stocks. And keep in mind, why do I use the new high as the alert? Because once we get range bound here and we're below the high, it cannot get out of there without popping a new daily high, right? And then, of course, what we're doing here, this is a multi-strategy window, so it's the same strategy chopped up into 3 different versions, and the only difference is we're changing the market cap. So 4 billion and above is in green. Any company capitalized between 2 and 4 billion is going to be blue, and under 2 billion is going to be yellow, right? So turbo up, meaning the volume's there, it's hitting a high, and then we just have to see if the timing is right. If it was lunch and we were eating a sandwich and talking on the phone, and we sit back down and we miss this break here, and now it's like new high, new high, new high. Well, would have been great to be in right here, but you missed it. This is called chasing up here. We don't want to chase, because the more you chase, the further, you know, the odds stack against you, right? So it's very crucial to get them just as they're poking out of this range. We don't want to chase, and even better is we want minimal energy expenditure getting up to that level. We wouldn't have wanted to see a move like this getting up to that level. So the less energy expended before the break, coupled with volume and nice tight risk, is what you want to focus on. But keep in mind, I'm showing you some good ones today, but everyone that comes through here is not going to look like this. Just like the professional poker player, and I'm talking about the guys that sit down and play for money every day. They're not the guys on TV just showing off at tournaments and whatnot. Those guys are folding 80% of the time. Folding 80% of the time. Just like when you're scrolling your symbols, you're waiting for this nice tight pattern, but guess what? You're going to be passing on 70, 80% of these things. So just keep that in mind, and I'm going to go ahead and drop this into the window. All right. Andy, you ready to show them your high volume breaks?
Yeah, sure am. Yeah, that's some good stuff there, Jamie.
There you go.
Thank you. All right, guys, I'm going to go back, to my favorite alert, which is called Extreme Volume High-Low Pro. I've shown this configuration over and over. You guys, I will share it, and you guys can look at it. But basically, the stocks that are green are moving up on huge extreme volume, and they have to be up over 1%. Just the opposite for the stocks moving down. They have to be down 1%, doing it on the same volume or greater. It has to be doing 10 times normal 1-minute volume and 5 times normal 1-minute volume. All right, so guys, what I've been preaching over here over the last several months is that you can be patient in the first 20 or 30 minutes and still find incredible opportunity. All right, even though sometimes the charts may look like they got away from you. Darn, I wish I would have got this earlier. And I'm going to show you some great examples today of some stocks that, yeah, they may have ran a little bit in the first 30 minutes, but trust me, I can show you the majority of the ones that failed. Suckered you in on that first 5-minute, 10-minute bar and then reversed, slopped around, you're fighting it. Whereas my theory is if these things trade after the first 30 minutes and they're still doing incredible volume and still moving higher, what does that say about the strength of the stock? All right, so, and I got 5 really good ones here. And the first one I'm going to talk about is the first one that came through at 9 o'clock today, that's Central, so it's 30 minutes after they open, and that would have been VIPS, VIPS. And you can see, just like Jamie was talking about it on the range break, you can see it happening right there. And the price went off at 866. Now this is a lower price stock, so it wasn't an incredible move, but nonetheless, you could get, a nice 22, 23 cents if had you held on to this one. And this one, has may have a tendency. It's a China play, and China has been real hot. So maybe one you want to keep on your radar. Let me see if it was on my. It's not on my Trend Change Pro, so I'll have to look in to see why it's not. But nonetheless, a China play that you might want to keep on your radar. This one right here, it's been obviously lagging, but I think they had some issues, legal issues a while back. So be careful with it. But nonetheless, it's finally put in a nice base down here, and it's breaking out of this kind of range. You can see it there. That was a huge level that it got to right there. All right, let's take a look at the next one. Well, Walmart. Jamie just talked about Walmart, and look at here at 9:01. Walmart comes through. Yep, you had a little bit of a move this morning if you didn't grab it right off the bat, but that's okay. All right, 30 minutes after the open, it's still doing huge volume, and this is a mega cap, and it's doing 10 times normal 1-minute volume, almost 7 times normal 5-minute volume. Okay, that tells you huge positions being placed. This is not just day traders. Okay, this is huge positions being placed in this mega cap. Went off at 96.26. Boy, look at that. Went out around 99.67. So there you have $3 after the initial move this morning. So once again, being patient, wait to see if these things are going to continue after 30 minutes. 2 great examples so far. Let me scroll up. I don't think NetEase worked. Yeah, pretty much closed right where it went off, around the 325. You still had, a little bit of alpha left in that. But you can see it kind of, that's what I love about our technology. I highlighted this in our last webinar. Our technology will show you the area of next support. So that tells me there's a good chance over the next few days this thing may want to climb up to that area of support. You can see it right over here. More than likely, that's all-time highs, and that's where its next date may be with. So, might want to keep an eye on NetEase, but that wasn't the one. One of the ones I was going to show you. Let me go PSTG. I think that one didn't work as well. As you can see, once again, the level of support, above there. Let me go here to the Mark. This is one I noticed that came through my extreme high-low pro yesterday afternoon. I told myself, you know what, I'm going to keep an eye on this thing. It came in late in the day, right around here, and was trying to take out this wick, but it was late in the day and it couldn't do it. And so I'm watching this, and you can see, there you go. There's a great example of our red line being drawn for you. Now, this only works when you're using a new high alert or a new high filtered alert. It will show you the next area of resistance. And if you go back over here, you can see exactly what it's looking at. That's very powerful to go back that far in time and find you support levels. And so if you're only looking at the past 6 months, you wouldn't know that unless you had our little red line drawn for you. Very cool stuff. Nonetheless, you could have bought this one at 521 and gosh, went all the way up to 625. That's a nice percentage gain there. Let's see. Oh, I did have NetEase written down here, so I take that back. NetEase was one of the ones, and boy, another really good one that came through at 948 today was V-Ray. You're not seeing a whole lot of stocks. A lot of this is the same ones over and over again. Okay, so it's not like you're having to look at a high ticker spitting out 20 stocks every 30 minutes at you. You're only getting the ones that's doing huge volume and have to be breaking out of some sort of a range. V-Ray comes through at 9:48, almost an hour and a half after market open. And look at this, just a beautiful breakout. You can see the line there drawn for you, and that's where you're pretty much triggered at 876. And the line is pretty much around that same spot. Pop through, a little bit of a, back and forth, but 5 cents. I think you can stomach the 5-cent pullback, and then more alpha to all the way up to 955, guys. That's an incredible move there. And look at the, the level of resistance. There's nothing here. Going back all the way over here, there's your red line, 2 points right there. And if you're watching this stock, maybe potentially has a date with that level right there coming up in the next few days. Time will tell. I obviously don't know that, but the path of least resistance is up to that level. So guys, if you haven't been using this, and I will share it to you. Red Hat came through here, but I think it was pretty much, it had a little bit of extra juice let into it. And once again, pay attention to this red line. Man, love that thing. But anyway, that's just the ones I want to show you. And you can see it's the same ones coming over and over. NetEase, Walmart. I love this alert, and I really love it now since we've added the smart red line for you there. It's just very.
Is your catalyst in there? Is that regular high or is it new high filtered?
This is just regular new high.
Okay.
Yep. So if I look at the strategy real quickly, I will show you. You're looking at, I'm sorry, regular high, regular new high. The filters, basically, I told you, I went over the volume for you, but here's what I have. Position in 10-day range. I have it at least about to break out of a 10-day range, and not far position in 20-day range, a minimum of 85%. It has to be really close to breaking out of a 20-day range too. I don't have a maximum in here, so these things could be at 52. They could be at all-time highs. I love it when they are, but I do not want to see them doing huge volume in the middle of a sloppy 5-day range. That is just suckers, trying to sucker you into a trade. I want them potentially breaking out of a range or have already broken out of a range. So anyway, I will share that, guys, as soon as I'm finished. I do want to show you something that I put together. And I'll tell you why I put it together. I put it together for the professionals. We are now entering into the professional marketplace. Not that we don't already have a few using it, but we are really going out our marketing for the professionals. And this is something they'll really dig. And the reason they'll really dig it is because it's a top list. So if they have a portfolio of stocks, say they have 50 stocks that they want to track, they can drop them in this top list, and I call this one my SMA tracker. Now, what have I done here? Well, it's a top list, which means it has no alert in it. There's no event that has to happen. It's only filters. All right, so if I go in my filter set, the only filter I have is it has to have earnings. This is just a formula that requires any symbol to come through to be reporting earnings. Okay, and the price has to be over $5. So that's all I have in this as far as filters goes. But where all the magic is happening is in the columns. Okay, so what have I done to my columns? Okay, I want to see change from the 200 SMA. I want to see the change from the 50-day SMA. I want to see the change from the 20 and the 8. So that way, all I have to do is look at these columns. A lot of people think they have to use a lot of filters all the time, but you're going to limit the number of stocks you're visualizing. So an easy way around that is to, instead of using a filter, just use it as a column, and that way you can see it. Of course, price, change from close, and relative volume. All right. So what am I going to do with this, or what is a professional going to do with this? Okay, let's say he has his portfolio in here. And you can see my price, change from close, relative volume. We'll put it on relative volume sort right now. I have my change from 8-day SMA, 20, 50, all lined chronologically. So 200-day here at the end. So if you're looking at a portfolio, I can easily just look at this and see pretty much where it is on a chart without having to scroll through each symbol on a chart. I can just go down through my list here, my portfolio, and I can see, well, let's see, this SBP, it's still below its 200-day moving average, but it's making headway. It's well above its 8 period, 20, and of course the 50. So I can tell this chart is probably going to try to make an attempt. I shouldn't say that, but it would be nice to see it above the moving average there. So that's one that's trying to dig itself out of a hole. It's positive against all of its moving average up until the 50, but it still has a ways to get to a 200-day, still 11% below its 200-day moving average. So this can be very valuable. So let's say you want to see which stocks out of your portfolio, or for you, it may be a watch list that you're looking at. Let's say you want to see which ones are close to their 50-day moving average. Very easy to do. You just sort by 50-day moving average, and then you just scroll down here, and let's see which ones are around 0. Look at all these ones that are close to their 50-day moving average. Okay, I can tell by this not having any value in the 200-day moving average that this is a new issue. It hasn't had 200 days worth of data yet. I can tell it's above its 50, above its 20, and potentially maybe trying to get above its 8-period moving average now. So maybe you're looking for stocks that are pulling back to their 50-day moving average. Let's see if I can find one here. Well, no, this one looks like it fell below, and now it's trying to pop up to its 50-day moving average. But anyway, you can see what I'm getting at. You can see where they're lining up to. Say, for example, this one right here. See if this is a good example. Make sure it's not a... All right, so you can see this one right here, this stock, even though it's kind of sloppy and slopping around, you can see that, wow, the 8-period moving average, the 20-period moving average, and the 50-period moving average are all kind of intersecting right now. So if this gets above its 50-day, there's a chance now. I got all these alerts just below the price. So let's say the price gets above the 50-day moving average. Now you have them all right below them. A lot of times that can be a launching pad when you have that many alerts all lined up underneath the price. So there's a lot of ways one could gather a lot of information without even looking at a chart and just looking at this series. And of course you can sort it by 200-day. Let's say you want to check out China stocks. Just showing you everything you could do was just something this simple. So I'm going to go to the symbol list, and I want to see how China stocks are doing. So I'm going to check my little China thing there and hit OK. OK. Now I got all the China stocks in here. Sort by relative volume. Wow, look at this XNet. I can just look at this and say this thing is so extended and so strong. It's 247% above its 200-day moving average. Look at these values. I can just tell that what this chart's going to look like even before I pull it up. And there you have it. You just have a very explosive chart. So it's amazing what you can do just by looking, without even looking at a chart. You can be able to tell, where a stock is. I can look at this Biden now and saying it's having a pretty strong pullback right now, just based on these values right here, but it's still above its, well above its 200-day moving average. And there you have it. It's having a nice, pullback there on the daily. So if you have something like this, you could just, oh, you know what, this is pulling back pretty hard. Maybe if it gets to this level right here where you have some resistance, I might want to create a price alert and want to be notified to that. Long, maybe put bounce off support, question mark. Boom, now I just created a price alert because I know just by looking at my handy dandy top list right here that this stock is coming down, and hey, I want to be notified if it gets this level. So guys, I just want to show you, the power of, what you can do with our, with our technology. Now, another thing I can tell by this top list is China stock is really doing well. I see all these stocks now. I'm wondering why I'm not getting more data. We must have a limited number of stocks. You can create your own symbol list, of course, guys, and drop it in here. But look at all these and how far they're above the 200-day moving average. And of course, China Internet K-Web is a trade of the week back on this day right here, which, as you can see, it's getting close to its all-time highs as well. So once again, Jamie, be sure to tell me if you have any questions that you're seeing that I need to address, and I'll be happy to address them.
I think we're pretty much caught up. Very, very engaged audience. Not a whole lot of new questions streaming through there. So
okay.
I think everybody's digging it.
Very good. Well, good. And once again, you know what? I thought I had this sorted by market cap. I'm going to check my filters once again. Yes, I do have 3 billion market cap. That's why I'm not getting a lot of China stocks in here. So I set this up to originally scan for stocks that have a 3 billion market cap or higher. So if I did take that out, I would have gotten a lot more China stocks as well in there. The average daily volume has to be doing, I'm looking for liquid stocks, because when I originally created this, remember, I was creating it for the professional. They want to see stocks that have liquidity and do, an average number of trades. But let's say you wanted to take this and you're not afraid of trading stocks that do 200,000 shares a day. We could duplicate this, okay, and we can go in here and configure it, and we can go in here and take out the market cap, take out or lower this to 200,000 shares. Okay, and okay. And now we're still on China stocks, and you can see we have a lot more than what we had in the previous thing over there. And great stuff. I mean, it's amazing if you want to sort. I love sorting by relative volume, so you can see the ones that were strong on the day, and you can always go back and find out where they are on the chart. But take a look at Baidu here. You can see that one's pulling down close to, it's just below, it's actually fallen below its 50 days, fallen below the 20 days. So this may be one I'm a little bit leery of buying unless it gets back above these averages. And by having my top list out, up here, I can keep an eye on it.
Hey, Andy.
Yep.
Hey, sorry, my question queue got out of order. I usually keep them sorted by time received, but it was out of whack. So I do see we had a couple of questions here.
Okay.
Brendan,
I'm looking too.
Go back to Brendan's. What would cause the rapid repeat of a symbol in your scanners, like V-Ray and Mark? And I'm assuming that's because it's the new high being used. So every new
absolutely
pin, click, click.
Yep. Yes. What that is since I'm using a new high and not a new high filter, you're referring back to this extreme volume, and it's going to repeat the same symbols over and over as long as they keep hitting a new high. Now, we do have a new high filtered. So if I went into this configuration and go to search here and show you we have a new high filtered. And what the new high filter does is it will filter out a lot of the noise where you're not getting at every penny a new high. Okay, and it's an algo based on price movement and time and volume, and it spits it out on average, depending on the stock, maybe every 7 to 15 cents you'll get a new alert. But it does kind of cut down on the noise if you're not using heavy filters like I'm doing. I don't mind a new high in this one because I know I have it filtered, and you can see I don't get a lot so much during the day that I can't follow it real easy. But if you're not using, maybe you're using a two times normal 5-minute filter, and maybe you're not using a 1-minute filter at all, and you're getting a lot of stocks coming through and it's hard to follow, then you might want to use a new high filtered. But let me, we're kind of getting low on time. Let me share both of these. I'll put this back on real time for you. And I'm going to drop these in the chat. The first one I'm going to drop in there is the new high, I'm sorry, the Extreme Volume High-Low Pro.
Perfect.
Mm-hmm.
And Darcy was asking a question about do we have to update to get the new alert? I don't know if that means to get these alerts. Darcy, you can just drop, you can fold these cloud links right into your product after you copy the cloud link. You can load it. Now, if you're talking about being on the latest version of Trade Ideas, best thing to do is always just go right to our website, click on Download TI Pro, and then we're going to have the production version, and then below that, we typically keep the latest version of the beta program as well.
All right, guys, and here is my SMA tracker. I'm putting in there now. I put the original one in there that has the market cap filter in it. So, you know, what's beautiful about our software is when somebody shares something with you, you can make it your own. And what I mean by make it your own, you can put your parameters in there. You can put your price range. Maybe you want to see $3 to $20 stocks. That's fine. You just take it. You take it and go in and reconfigure it, kind of like I did that second time around. But anyway, I did drop it in there, guys, both of those alerts, and they're labeled. They're in the chat that you can find in your GoToWebinar interface. And while you're doing that, I'm going to bring Scott back in, and you guys hang on because Scott's going to give you a discount code. All right, Scotty, you want to come back in? All righty.
Yeah, a couple items. Tomorrow there's a new podcast coming out, so make sure that you're subscribed to Trade Ideas Podcast. It's really easy. Just open whatever application you listen to podcasts in and search for Trade Ideas Podcast and then click on subscribe. Then you can also go in and download some of the previous episodes like last week's or some of our special guest episodes if you see that in the description, or stay tuned for the new one that comes out late tomorrow and listen to it tomorrow afternoon or over the weekend. You can save 15% off your first month or year of Trade Ideas with the code STUDIOTIME. It is case sensitive, so put your caps lock key on and make it all caps. You can also download this sheet and some of the other ones by expanding the handouts panel on your GoToWebinar interface and clicking on the blue download for the PDF. And if you have any, let me mention that purchasing any subscription includes a full hour of one-on-one training, and that includes purchasing a subscription using the product code to get the discount. You can also use that code STUDIOTIME to upgrade from standard to premium if you feel like getting access to Holly and all that kind of good stuff. Email us info@trade-ideas if you have any questions. You should be following Jamie on Twitter and also Facebook, Trade Ideas Pro. Jamie is at QuantBot, Steve Gomez is at Today Trader, Dan Merkin is Trade Ideas 1. We have some other handles too. Shoot us an email if you have questions, info@trade-ideas.com, and we'll have a recording of this webinar up later on tonight or tomorrow morning, and you'll get an email reminder tomorrow about where the playlist is. So thanks everyone for attending. Thanks, Andy. Thanks, Jamie.
Oh, yeah. Yeah, thank you, Scott, and thanks, everybody. See you tomorrow in the support session. If you want to learn more, please come in there.
Yeah, cheers, y'all. Bye.
Bye-bye.